This is gold, and how did I catch this and what's my expectation? So first, it all starts from the daily time frame. Now, what I'm showing you now is based on the Komepips trading protocol. So it starts with the higher time frame. So anytime you want to, you have to start with the higher time frame. So all I did was to come to the higher time frame here, and on this higher time frame, I want to see what price is doing. So for example, what exactly is price doing? First, for me to know what price is doing, I need to check yesterday's price action. So this was the price action before the New Year day. So this was the last candle before the year for 2025. So normally it's just use a normal MSNR, which is the daily reject daily. So we can call this a MSNR key level. Right, MSNR key level, which we have here. Now, this is one of the way we can use to identify our bias for the trading protocol, but this is not all. Now, the next thing I did was to check the phase of price. And how do we know the phase of price? We are going to know the phase of price by candle closures and candle counting. All right, so this is where we come to the opposing swing. Remember, price will not move until there's a swing point. So if price wants to move, it has to create a swing point, then it moves, right? So for example, if this wants to move, it's creating a swing point already, so price can move. But how do I know if price will not continue and push down? First, price is reacting from a key level, potential level, that we might see what? A retracement or a reversal. Then what do? I check the opposing swing point on the daily, and what do? This is actually a CRT. If we go to the silver is a correlating pair for gold. So no matter the pair you are trading, any pair, you look for the correlating pair for that pair. The reason is just for you to know this, nothing more. Okay, now if you see the opposing, you can notice here that silver created a higher high while gold did not, which means gold is actually the stronger pair for this particular move. So obviously this becomes our what? CRT. So we use this, we start from here, count our candle phase from there. So we have this as phase 1, phase 2, phase 3, and phase 4. Now, once phase 4 is completed, we are expecting 3 things to happen. 1, we are expecting consolidation to happen, we are expecting retracement to happen, or we are expecting a total reversal to happen. Now, once you have this in mind, it will tell you where price might likely want to go to, especially on the higher time frame. So this was exactly the same process or sequence that I used. So after this being my candle 1, candle 2, candle 3, candle 4. Oh, I said, okay, we already have what? A completion of a cycle. So the market phase have been completed. So there is a possibility that we might experience what? A reversal or consolidation or retracement. So, and that will be with this candle. Then another thing that I look at this candle. Does it have a wick? It does not. It doesn't. Now, this is telling me one thing, screaming one thing to me. And what is that? Expansion, expansion, expansion. Let me show you or teach you something. See this candle. You see how long this wick is. Now, because this wick is long, what is the probability that price will expand massively to the downside on this day? Probability is not that high. Why? Because it has large wick. All right, let's check this expansion candle. See this expansion candle, the wick. Okay, let me remove this. Look at that. Look at this expansion candle. You see the wick, how small it is. So what is the possibility that this will expand? The possibility is high that it will expand. Why? Because it has a smaller wick. So it is safe to say that anytime you find a candlestick that has a smaller wick just like this, the possibility that it will expand lower is high. So if I'm able to catch a setup here, I should be able to expect an expansion. That's exactly the idea with this particular candle. So what did I do? Remember, we already have 2 confluences or 3 confluences for our bias. First is the MSNR key level rejection, which is daily rejecting daily. Secondly is the market phase, which we have to check from the opposing swing point, which is 1, 2, 3, 4. So, which means the market phase for the sales have been completed. So, we're expecting three things to happen: consolidation, retracement, or total reversal. And what do we see here? We are seeing, we don't know how, we still have 8 hours to go for this day. So we don't know, this candle can still push up or can come down and close like this. Now, how then can we now position ourselves in order for us to have a better experience? How do we position ourselves? This is exactly how to position ourselves. We already have how many confluences? 3 confluences. So now we have to confirm this. How do we confirm this? There are different ways we can use to confirm this. So let's see. There are different ways we can use to confirm this. One, remember, we already have MSNR key level, and we have our breakout, which is change in state of delivery. This alone is confirming the current candle 2 on the daily time frame. So we have a candle 2 on the daily time frame. See it here. This, of course not. This is not candle 2. There's no candle 2 on the daily. But let me check silver. This, right? Okay. Yeah, this is it. Okay, that would be silver and gold here. Look at that. They are not correlating at all. So let's ignore that. Of course, I didn't check that. I'm just trying to use this to explain to you so that when you go to your pair, your chart, you can understand other scenarios, right? So this is also, this is, what's it called now? Daily reject daily, 4 hours breakout. Now, do I always need 4-hour breakout to trade the Komepips trading protocol? No, I don't. But if I see a 4-hour change in state of delivery, is another confluence for me and is another entry model for me entirely, actually. Now that I've found that, okay, where am I looking to enter? The next thing I want to do, I want to identify my inverse CRT, which is the inverse candle range. Okay, so like I said, I'm using the word CRT just for the sake of probably social media algorithm. It's not that the idea behind it is more than, it's beyond that. Okay, so I'm just mentioning those names because of the algorithm. So for example, we have this as a CRT here, right? These are CRT on the 4 hours, and what do we have here? It was broken, so that becomes our inverse CRT. It's not complex, it's very simple, and I just explained it to us now. Now that we have our inverse CRT on the 4 hours, yeah, this is it. What happened? This next candle came, taps it and push up. I'm not going to enter because of this. No, there are other confluence that I will have to check, which is very important. Now, this alone is already telling me that, okay, it's screaming buy. In fact, everything has been screaming buy for me. Why? Because all the selling arguments have been eradicated. So anytime you come to the chart and you want to look for your buyers, it's very important you have and understand this. First thing first, you need to ask yourself, what are the arguments between the buyers and the sellers? What are the sellers doing and what are the buyers doing? When does the buyer want to move and when does the sellers want to move? Where are they coming from? These are some of the questions you need to ask yourself from within in order for you to make your decision. So if there are sellers and there are buyers, you need to first of all understand, okay, if there are buyers, where are buyers coming from and where are they likely to go to? If they are sellers, where are sellers coming from? Where are they likely to go to? Do you understand? So we need to have all of this as a way of checking what we're doing, because if you don't find a way to check what you are doing, it's going to be difficult for you to make progress in this. So, okay, what exactly is the argument between the buyers and the sellers? So all the selling arguments have been cancelled. Why? We have, for example, a daily key level rejected, a 4-hour breakout, okay, and I found my iCRT. So basically, okay, I want to buy. So the next question is, where do I enter my buy? So what I want to do next is quite easy. I will have to go to the 1-hour time frame, which obviously will be my entry time frame. So on this 1-hour time frame, how do we engage? Now, at first I will remove this. This is not part of it. Why? Because on the 1 hour, there is no iCRT on the same level, even though it's a 4-hour iCRT. Some of you understand later on in the future when you understand fully what I mean by iCRT and how to use it, because there's a how to use it. It's not enough to just spot anyone and use. There's how to use it. Okay, so of course, like I said, there was a rejection from this iCRT on the 4-hour time frame, which you saw here, but I'm not interested in that rejection. After all, I was not even on the chart when that happened, but that's part of the confluence that I had, so I will delete that. Now, on the 1-hour time frame, what exactly can we see? Let's clean the chart a bit. Now, on the 1-hour time frame, look at this. We have our iCRT here. So this, pay attention, is getting more interesting. This was where I'm interested in taking my entries. In fact, that was when I came into the chart around almost 11, almost 12, something like that. Now, we have a break and a mitigation of that level. So let's put a vertical line there to know where it got mitigated. Now, having seen this mitigation, what else? Of course, I can enter directly, but I did not enter. Why? Because I was not even on chart when this happened. If I was, I could have as well entered directly from here. However, let me show you how to confirm it. 5 minutes. When you come to the 5-minute time frame, price taps my 1-hour iCRT. Look at my breakout here. Now, on this particular breakout, it's clear, right? We have a fair value gap, in fact, multiple fair value gap, 1 year and 2 year. So this is a fair value gap, and this is a breakaway. This is a breakaway gap. Okay, breakaway gap is a kind of fair value gap that the third candle has large expansion than the last 2 candles, right? So that's the breakaway gap, and usually breakaway gaps are very, very powerful as well. Okay, so we have this as our fair value gap. So there is where is it? That's what's there. So we have this as a fair value gap. Now, it's not compulsory anyway, but it's just an additional confluence. So basically, I'm waiting for price to give me an entry opportunity, which we have this as our inducement, which I will call iCRT liquidity. You understand better. For those of you who have watched my last video on my other channel where I posted about the Komepips chariot inducement, you should be able to understand this better. Remember, I said the Komepips chariot inducement is an inducement whereby price taps into a fair value gap, trades away, and we expect that price will take out that low and respect it, and respect that level or key levels below it. And that's exactly what happened here. Now, did I enter here? No, of course. Remember, all this while I was not in the chart. So I was in the chart around this, when this candle was forming. So what did I do? I waited patiently. First, I expected price to break this. So this is normally my entry ought to be from around this level. Now, of course, this is another entry model on the trading protocol. This is model 2 actually, but we'll not go about that for now. I'm just trying to explain this particular setup that we took so that every one of us can understand this. So now that we have a break of structure on the 5 minutes, what else? I was expecting price to just come and do what? Respect this iCRT. Look at that. So that's why I drew that on here like this. So I set my limit. I'm not expecting price to trade below this low. Why? Below this week, because it's my model and that's what I want and that's what I think. If this would hold price, most likely, most often than none, it respect the upper part of it. So that's why we have it on. Otherwise, this whole zone is actually the value zone. All right. But you see how you use that stop loss where, so there's no point. That's why I set my limit here and boom, I entered. Of course, I'm expecting price to take this high, right? But you also need to consider the opposite side of the market. And that's why I took my profits around this level and took one around here. Yes, took the other one here and price push down. It is all about understanding. Why? Because I felt that, okay, price might use this level to either retrace, to give a deep retracement. As a matter of fact, on the live call with the Komepips academy student, I told them that price might likely reverse or give a deep retracement from here. So I started during the live session, I started taking or managing my setup, taking my profit from here. It's simple. Let me explain. If we go to the daily time frame, I already explained this to us. I'm expecting price to expand more, right? Yes. But checking the time, then I think time was around 1 p.m. GMT plus one time now, right? Time was around 1 p.m. Oops, what's happening to my okay. So what was the probability that price will just continue like that? No, when I checked it, probability wasn't that high, and of course my instinct, I had to say, okay, I will just take my profit from that level, and that's what I did. Now, why did I now take this other one? For those of you who will be watching this later on, this trade was posted on my free Telegram, rather on my Komepips mentorship channel, and of course I entered this particular trade. I just pointed it to them that price might likely use this zone, and of course that's what price did. And why did I enter there? It's simple. It's more like a continuation setup. Remember this, our iCRT price mitigated, price created what? A candle 3. This is a candle 3, and price created, did what? Broke this MSNR A-shaped key level. So what was my expectation? Based on my backtesting and my training and my study, I know that, okay, price might likely use this level, and boom, that was why I had to enter from that and targets. You see, that was even a very sniper entry and sniper exit. See, that's the key level. So price might, you know what, price can happen. So that's why I had to, of course, take my profits, of course, right there. So if I remember during my edit, I will just put in the screenshots for those of you who say, oh, it's better to teach than to trade. Yes, it's better to teach than to trade. But see, I'm not teaching you what I don't do. So what I'm showing you now, if you sit down and watch this video again and take notes, then go to your chat and study. Believe me, you are going to become better. I hope you learned one or two things from this particular trade. If you did, kindly let me know if you'll be watching from YouTube, let me know in the comment section. Right, so I'm wishing every one of you a profitable 2026 ahead. Thank you so much. All right, shalom, shalom. Are you ready to trade with clarity and confidence? We are now accepting students into the Komepips mentorship, where you will learn the exact Komepips trading protocol step by step. Click the link in the description and secure your spot.